Hi guys, it's Dr. Robinson. This is the October 21st, 2023 meeting of the Money Masters Investment Club. Not a lot to talk about. I think we got a total of two additional slides to go through, so let's kind of get to it. So the first slide, of course, is our financials for the week. So we're up just over 2% for the week. So the ending NAV as of 10/21 23 is $33.73. Overall, pretty pleased with what we did for the week, given what's going on in the market. So, in case you haven't paid attention or don't know what's been going on in the market, what we've seen over the last 5 days, it's actually been a little bit longer, but it's been spiking a lot more aggressively this week. So, for the week, the S&P was down 2.39% for the week. It's a pretty big or significant drop for the week, and it's driven by a few things. And of course, we spend most of our time either in the Qs in the Nasdaq or on the S&P 500. I did a lot this week on the S&P 500. But the problem with that right now is that with all of this activity going on, for example, you see the VIX there spiked 18% for the week. It's up to 2171. Just a couple of weeks ago, we were talking about VIX being at some of the lows for the year. We were at 12s and 13s. So we've spiked back up to 2171. Of course, a lot of that has to do with the war in Israel, but more importantly, it's probably also dealing with issues from the Fed with the potential for raising rates, keeping rates higher for longer. All of the stuff that we've been talking about for months, the market is still trying to price things in or price properly where stock prices ought to be. We've also seen some oil spike. Now, oil did come down a little bit. Joe Biden made a deal with Venezuela to allow them to produce a little bit more oil. He did that so that we didn't have to produce our own oil, but it allows more oil to enter the market, and that will help bring down oil prices. And it did. Oil prices late last week had gotten up to $91, $92 a barrel. Right now, they're sitting at about $89 a barrel. So it did help a little bit, but there is still a fear of contagion. Of course, Iran is threatening some stuff in the Straits of Hormuz. Some other countries, as the war in Israel gets bigger, if it gets bigger, I'm not saying it's going to, but if it does spread, if there is some contagion, oil prices will easily get into the 100, 110, $120 range, maybe even higher. The last time we had a major war in the Middle East or any kind of activity in the Middle East, we saw oil prices go to 150. I'm not saying it's going there. I'm saying there's a potential for higher prices in the future unless things kind of calm down over there. And I don't see anything getting calmer in the next few weeks or several weeks anyway. So oil is kind of bearing down on the market. But you'll also notice that last thing here, the 10-year bond. The 10-year bond hasn't hit 5% in over 20 years now. So it's been a long time since we've seen a 5% on a 10-year bond. And we actually hit it twice this week. It has retraced a little bit right now. So currently, as we speak right now, it's at 4.91. I think it goes higher from here, not because the Fed wants it to necessarily. I think the Fed kind of does because it keeps them from having to raise rates as long as the 10-year kind of keeps coming up. And remember, what the Fed's trying to do is slow the economy a little bit. And to slow the economy, they've had to raise interest rates. Well, we've got a meeting coming up for the Fed coming up on November 1st. They got their next decision on raising interest rates. Common knowledge has been that the Fed was going to raise rates in November. I think that's off the table for now. Again, I don't have any inside information, but based on what's going on in the market and what's going on in the bond market specifically, I think that the Fed doesn't have to raise interest rates in their November meeting simply because the market has done it for them. Remember, just a few weeks ago, the 10-year was at 4.2, 4.3. It did get up to 4.5s and some 4.6s. But now that it's close to 5 and it has actually breached 5 to some extent, that's kind of taken a little bit of pressure off the Fed to have to raise interest rates because the market is doing it for them. Remember, when interest rates go up like this, especially on the 10-year, because that's where we price in home mortgages, that's where auto loans and things are priced in. So as this rate goes up, you'll see mortgage rates go up. We saw mortgage rates hit 8% this week. So as this rate goes up, it slows the economy automatically, so the Fed doesn't necessarily have to. So it does give the Fed a little bit of breathing room in terms of not having to raise rates. I still don't know whether they will or not. I don't personally think they will, but they could throw us a curveball and go ahead and raise the rates anyway. There is still a lot of talk that they want to raise rates one more time. I just don't think November will be the time. Now, of course, a lot can happen between now and November 1st when they hold their meeting. We've still got 2 weeks or so before, while the war kind of continues in Israel, whether we see Iran or any other country doing anything about it, or Saudi Arabia cutting back on oil prices and stuff, or oil output rather. So there's a lot of things that could change, but given where we're at, I don't think we'll see an interest rate increase in November. I think the Fed, the bond market has kind of done it for the Fed. They've kind of solved their problem for them. One other thing about this before we end the week this week, this volatility has caused one of the things that we kind of had gotten away from over the last couple of years. Now, for those of you who've been around long enough to remember, when COVID first hit, we saw the VIX go from, let's say, at 12 up to, I think the high at one point was 35. So a 35 VIX is very, very high, and it's dangerously high. And the problem with the VIX being real high, now remember, we like a higher VIX. Keep those terms in mind. I like a higher VIX. I don't like a really, really high VIX. A really high VIX poses problems. There is a lot of money to be made in the market when the VIX is really high, but keep in mind a couple of things. Options become very, very expensive. And the more expensive they become, the more dangerous it is for us to invest, because one of the things that happens with these high VIXs is these large retracements. We're starting to see those again right now. We saw it happen 3 or 4 times this week. And what I mean by a retracement, guys, is our charts will tell us that the market's heading one direction or another. And then out of the blue, the market immediately goes the opposite direction, and it doesn't show up on our chart. So our charts give us no warning that this is happening. The problem with that is when it happens is if the market retraces too far, let's say it goes down $1, for example. Well, that puts us at $50,000 to $60,000 in the hole for what I do. That could put me $50,000 or $60,000 in a hole for every contract we hold. So the problem here is, at some point I have to deal with that, and I either deal with it by, we've always talked about having 3 options here. One of the options is just take the loss. Well, I'm not one who likes to take the loss, because sometimes, or most of the time, there's usually a chance where we can kind of either fix it or the market fixes itself. Now, the interesting thing is this week, the market actually fixed it itself. Now, I did overreact one time when I was down 70 cents out of the blue in one of my trades, and I ended up strangling. And I strangled, and then the market kind of whatever it is that caused the market to go down. I was in calls at the time. Whatever caused the market to go down, and it went down very violently. But whatever it was, it went away right away. So I was in the trade for just a few minutes. All of a sudden I'm down 80 or 90 cents. I had to strangle. I did the strangle. It went away. Now I got caught holding a strangle, or got caught holding puts when I didn't need to. So those are the kinds of things that happen when the VIX gets real high. So one of the things that we've been doing, or I've been doing, is holding our positions a little bit shorter, and make sure we take our gains quicker than what we would normally do. For example, the last few days, what I've been doing is whenever I'm up 30 or 40 cents, that's $30,000 or $40,000 in a particular trade, I'll generally go ahead and pocket the money so that we don't have any risk of losing it any further. And then if I feel like the market's going to continue that way, I'll just jump back in the trade. So basically what I'm doing is I'm getting into a trade, locking in the gain fairly quickly, jumping back into the trade to see if we can get more gains. And if we do, lock that money in too before any of these retracements can come in and kind of knock us out. So that's the kind of the goal, or what we've been doing here. So with this volatility, it's good for us. We make a lot more money when the VIX is higher like this. 20 to 21, 22 is kind of our sweet spot in terms of the VIX. So I don't want to see it rise too much more from here. If it does, that means there's bad things happening in the economy, and maybe with the war expanding and stuff. But hopefully the VIX will kind of top out right around here, and I hope it kind of stays in this level. Not that I want bad things to happen, but when it comes to the VIX, volatility is kind of what we live for. So we had some good volatility this week. Um, hopefully it doesn't get too much higher, but volatility, although it's a good thing, does pose problems for us. So if you're trading options as well, like on the daily calls that we do, one of the things you want to be aware of is that these retracements can be volatile and they can be violent. So you got to be careful. And sometimes when you're up 30, 40, 50 cents and you think it's going to continue going because your charts indicate it's going to continue going, sometimes the better part of valor is just go ahead and take the profits, lock that money up, and then get back into the trade if you think it's still going to go higher. Because at the end of the day, if it does move the opposite way, you're not necessarily losing any money on the trade. So uh, at the end of the day, we've had a pretty good week. I'm hoping that continues next week. And other than that, we'll see you guys. Enjoy your weekend. We'll see you guys on the call next week or on the daily call. We'll see you starting on Monday. Have a good week, guys.